Hey, welcome everybody. This is Terry Bontemps. Welcome to Bulk Non-Performing Notes directly from the trading desk of the top 5 banks. You guys are going to really enjoy the training that I have for you today. This right here again is a case study of a house that is in a great neighborhood where people want to live at. Well, what I want to talk to you guys today, I'm not going to talk to you about the house. Okay, I want to talk to you guys about being the bank. And that's what makes us different than real estate investors. I'm not saying to focus on the house is wrong, but we're looking at it from a whole different perspective. We're looking at it from a bank's perspective and doing it from a trading desk. What makes us the bank is simply this. We own the note. The owner of the house, the landlord, whoever owns that house makes the payments to us as the bank. And this is the note that makes us the person that they send the payments to. Now, one thing I'm going to tell you about notes, it makes money. Okay, notes make money in so many different ways, and we talked about it with the mortgage-backed securities. We talked about with the collateral, or excuse me, the commercial mortgage-backed securities. We talked about the residential mortgage-backed securities. Okay, the way houses spits out profits. Mortgages and notes produce millions and millions and $1 million of profit. And so what I'm going to show you today is how it's done on our level. Now, the one thing about owning a note, you have no maintenance. You never paint, do repairs, or fix toilets. You never pay retail for the houses. You never become a landlord. There's no liability or management responsibilities. You never need the homeowner's permission to buy. You never have to qualify for loans. And you never have your credit checked. There's no real estate agents commissions to pay. There's no escrow fees, termite reports, or title fees to pay. There's no 3 1/3 California withholding tax for those of you that are in California. But most of all, there's no competition. Now, guys, what would you do with your time if you didn't have to do all these things that landlords and owners of properties do in dealing with tenants, toilets, and trash? Okay, again, I'm not bad-mouthing it, but on this side of the fence, when we're the bank and we own the note and we make money, we don't have these things to do. Think about it. Does the bank ever come out and do any repairs on your house? And that's the perspective I want you guys to shift over to as far as being someone that owns the paper. Let me go over this property again. The property was owed $230 on the first, and the $230 was the market value, and it was owed $140 on the first, and it was current. It had a second. The second was owed $40,000. It was behind 17 payments, and there was $50,000 of equity. Okay, again, that's the house. Okay, and that's what real estate investors go after. And again, real estate investors only have 2 ways of making money. They buy the property, they sell it, they buy the property, and they rent it. Again, we're going to talk about the bank. So the first mortgage, those are the terms that they signed up under. And again, you guys, we want to become the bank simply. We're going to go out and buy that second. Now on this property, the homeowner did not want to sell the house. So if you're a real estate investor, you would not be able to do this deal. As a banker, we buy that second mortgage. We're going to buy it at a discount. Okay, again, we're trying to buy the note. I want you guys to understand that's what we're doing, buying paper. And those are the terms right there on the right-hand side. Now, again, there's many ways, okay, that this note produces profit. Let's go over some of them. Now, again, there's 7 different ways you make money when you buy notes, okay? One is the foreclosure. You have the refinance, the sale, the deed in lieu of foreclosure, the short sale. You have cash for keys and the loan modification. These are all the different ways that you get paid once you own the note. Okay, so the owner can foreclose, they can refinance, they'll end up selling the property. There's the deed in lieu of foreclosure. We have the short sale, and we have the cash for keys, and then we have the loan modification. Again, you guys, these are called buckets of money because these note deals and these houses spit off these profits in so many different buckets, okay? Now, I told you guys if we were to foreclose on this note because we bought it for 10, we were owed 40, no one showed up at the auction, I would own the property, I could foreclose. If the homeowner refinanced or sold the house, they would owe me $40,000, even though I bought the note for 10. If they gave me the deed in lieu of foreclosure, okay, I can turn around and sell the property, I would make $80,000. On this scenario, let's just say the homeowner came to me and said, Terry, we want to give you $25,000. Although we owe you 40, we're going to give you 25. Okay, and some of you would say, Terry, I only paid 10. I'll take the 25, make my 15 profit. I'm happy. If we gave the homeowner $25,000 for them to sign the house over and give us the cash for keys, we would make 50 on that transaction. Okay. Also, again, on this note, the owner had signed for 240 payments. The owners had made 20, and there was 220 remaining. So if I modified the loan once I bought it, and I got the homeowner to start making payment arrangements, they would owe back over time $100,000. I want you guys to pay attention to the different buckets that produce profits when you own the note. Look at that, you guys. Look at all the various ways. And again, you don't have to touch the property. Okay? What I call this is simply this. I want to try to create a menu of that same house. I want to create a menu of what I want as far as numbers, and I want to become the bank. And then what I'm going to look at doing, you guys, I'm going to create a tranche. I'm going to create a tranche of loans. Okay? And if you take a look, the tranche that I'm going to show you guys is in the middle section. Okay, it's called the senior performing tranche. I'm going to show you the equity tranche. I'm going to show you the senior second non-performing tranche on another day, but I'm going to create a senior performing tranche with that same type of loan, but I'm going to ask for 100 loans instead of just buying the one note. I'm going to ask for 100 loans, and that's what hedge funds do. So again, I want to ask for a menu, and I want it brought out exactly the way I want it. Again, I don't want a house. I want a note, and I want a note, okay, that's in the middle senior performing tranche, and here's what I'm going to ask for. I'm going to ask for performing first with the non-performing second, and it has equity in the property. I want to pay 20 cents, okay, on the dollar for that note, and I want houses with $200,000 to $250,000 balance. And again, let's go back to the number one case study. Again, the properties were $230. First was owed $140. Second was owed $40, and it was behind 17 payments. $7,725, it had $50,000 of equity. That's the recipe that I'm going to ask for on 100 houses. Again, I want to buy that second note that's worth 40 for 10. Again, I'm buying the note, okay? This is Wall Street stuff, and guess what? This is what hedge funds do to make a lot of money. So again, let's take a look at this. I want to buy 100 loans, but let's base it on the one. Again, one loan, $40,000 payoff, $50,000 equity, second mortgage, I want to buy for 25 cents. Look at the numbers if I buy 100. That's 100 loans, 4 million UPB, 5 million in the equity. I'm sorry, the 4 million is the payoff, 5 million in equity, and their second mortgages, my purchase price is $1 million. So look at the payouts in the various buckets, okay? Again, if I was to foreclose on every single 100 of those properties, $8 million. If I turned around and sold the property, is what we would make. Again, my purchase price is $1 million. If they were to refinance all 100, that would make $4 million in a refinance. Also, selling the property again, $4 million of profit. The deed in lieu of foreclosure on all 100 houses would bring in $8 million once I turned around and sold them. Let's say again I sold on a short sale. That would bring in $2.5 million. If we did the cash for keys, $5.5 million. Last, which is my favorite, if we get every single homeowner on a loan modification, they were to make every single payment, you guys, look at how much money the hedge fund makes from a $1 million purchase. That's held over time. That is staggering amounts, and that's why hedge funds are going in, buying from the banks and pools of mortgages. So that's the payouts and the profits, and this is a case study. A little bit later, I'm going to show you guys some actual numbers on some real pool purchases that I know about. So I hope you guys were impressed with what $1 million of purchase can do. Go out and buy 100 loans from a bank and at the trading desk and produce these types of profits. And again, that's why hedge funds are so excited about pools of notes and mortgages. Hey, you guys, there we go. That's bulk non-performing notes directly from the trading desk of the top 5 banks. Been Terry Bontemps, and I hope you guys have enjoyed this presentation. Take care, and we'll talk to you guys next time. Bye.